If you've ever been denied for a business credit card or business loan, there's a good chance the problem is simpler than you think. It's not with your credit score, not with your revenue, but with the way that you set up your business bank account. Most business owners treat this like it's nothing. You pick a bank, you fill out a form, and you move on. But the choices that you make right here at the very beginning can determine whether lenders approve you for serious money later on. I've helped clients secure millions of dollars in business funding, and the ones who struggle the most have this one thing in common. Their banking setup was wrong from day one. In this video, I'm going to show you exactly how to open up a business bank account the right way, what documents that you need before you apply, the mistakes that will get you denied or block you from funding down the road, and the account habits that tell lenders that you are a business worth betting on. Before we get onto the how, let's talk about the why for a second. A business bank account is not just a place to store money. It's the foundation of how your business gets taken seriously. It keeps your personal and your business finances separate, which makes tax season dramatically easier and protects you if your business ever gets sued or audited. It gives you a clear picture of what your business is actually making instead of guessing based on whatever is left in your personal account at the end of the month. And this is the starting point for everything else that you might want down the road. Business credit cards, business loans, lines of credit. The account is just not a formality. It is the foundation on everything that gets built on. So let's make sure that you build it right. Before you apply anywhere, you need to have the right documents and information ready. Missing even one of these can delay your application or get you rejected outright. So let me save you the headache. First, you need your basic business details. Things like your legal business name, your business entity type, whether that is a sole proprietorship, an LLC, or a corporation, and your business address. Second is your tax identification number. For most business owners, this is going to be your EIN or your employer identification number, which you will get directly from the IRS. Technically, sole proprietors can use their social security number here, but I don't recommend it. Getting an EIN is completely free and it takes about 10 minutes on the IRS's website. And it adds a layer of credibility to your business that a social security number does not. Once you have that confirmation letter from the IRS, keep it somewhere safe and easy to find because banks will ask for it and so will lenders. Third is your business documentation. This includes your articles of organization or articles of incorporation, depending on your structure, and your operating agreement. A lot of single member LLC owners out there skip the operating agreement, thinking that it only applies to multi-partner businesses, but it does not. Banks, they may request to see it. Fourth is a valid government issue ID for every authorized signer on the account. So this includes a driver's license or passport documents. Fifth is that some banks require a minimum opening deposit to activate the account. Others waive this entirely, so know this before you apply so there are no surprises. And sixth, banks will also ask for some basic information about your business operations. Things like how many locations your business has, where your products or services are sold, the general nature of what your business does, your annual sales, how many employees that you have, and a type and volume of transactions that you expect to run through the account. Having a clear answer on each one of these ready before you apply makes the process significantly smoother. Once you have all of these in order, the application itself is usually quick. Being prepared is what separates from a same-day approval from a week of going back and forth with the bank. Having everything ready is just the first step. But there is still a mistake that kills more applications than missing any document ever will, and most business owners have no idea that you're making it. This is the number one reason why business owners get rejected for bank accounts and later denied for funding, even with their credit looking solid. Your business name has to match exactly across every document and profile that you have, your LLC paperwork, your EIN letter from the IRS, and your bank account application. That is enough to trigger a rejection. I talk to business owners all the time who cannot figure out why they keep getting flagged. When we look into it, it always comes down to a name mismatch somewhere. They set up their LLC, got their EIN, and type in a slightly shorter version of their name on the banking application because it was way faster. That small difference ends up costing them more time than getting it right the first time. So getting the name right keeps you out of trouble with the bank, but there's still also another layer that goes beyond just the application. And it is something that will follow your business everywhere once you start going after credit and funding. Once your account is open, there's still one more piece of your business profile that needs to be consistent everywhere, and most people tend to overlook it. It is called your NAICS code, and it is a number that classifies your industry that your business operates in. Banks and lenders use it to assess risk before they make decisions about your account or funding your applications. Your NAICS code needs to be the same across your bank account, your Dun & Bradstreet file, your Experian business profile, and your Equifax business profile. Here's what catches most people off guard. Certain NAICS codes fall into a category that the banks consider as high risk. And if your code lands into one of those buckets, some banks will automatically decline your application without further review. So when you set up your NAICS code, make sure that it is accurately reflecting of what your business does and does not accidentally flag you as high risk. Lenders cross-reference this information, and inconsistencies across your profile are a quick way to raise red flags before you even ask for credit or funding. The next question is where you should actually open your account. And the answer depends on what you're trying to build. Not all banks are built the same, and the ones that you choose will have a real impact on your ability to access credit and funding later on. Think of traditional banks as national lenders, places like Chase, Bank of America, Wells Fargo. These are worth considering if you are planning to apply for business credit cards or loans through that bank down the road. Chase, for example, wants to see an existing banking relationship before they extend serious lines of credit to a business. Opening a checking account there, making a deposit, and letting a relationship build is the move that pays off later on. Credit unions can work well for certain business owners who want personalized service, but most of them have a limited menu of business products and fewer digital tools. Unless you are with a very large credit union, your funding options there will be narrow. Lastly, online business accounts have become a serious option for small business owners. Fast approvals, no monthly maintenance fees, and built around tools that small businesses actually use. If you want a clean setup with strong digital features and none of the friction that comes with traditional banking, this is a strong route. The mistake that I want you to avoid is picking a bank just because it's familiar. Do not go with your personal bank out of habit. Think about what you're trying to build and pick an institution whose products, relationship, and fee structure will actually support that goal. That brings us to today's sponsor, Relay. Relay is a business banking platform built specifically for small business owners and sole proprietors. And it is a great example exactly what I was just talking about when it comes to online business banking. When you open up one Relay account, you can create up to 20 separate checking accounts all under one login. Think of it like digital envelopes for your money. One for income coming in, one set aside for taxes, one for operating expenses, and one for savings. You always know exactly where your dollar is going. Relay also allows you to create, send, and track invoices directly in the platform, so no extra software is needed. You can also automate payment reminders so you actually get paid on time. And it connects directly to QuickBooks and Xero so your books stay clean all year. There are no hidden fees and no minimum balance requirements on the starter plan. For most people watching this is more than enough to get started the right way. The link to open up your Relay account is in the description below, or you can scan the QR code on the screen right now. Opening the account is only the beginning. What you do with it is what determines whether a lender approves you when you actually need money. You want to keep money moving through the account consistently. Lenders look at your bank statements when they underwrite you. They want to see regular cash coming in and out. An account that sits quiet for 2 or 3 months tells them that your business is not active. That alone can get you denied. Next is to never let that account go negative. An overdraft on a business account is a serious red flag to any lender reviewing your statements. It signals that you're not managing your cash flow, and that is the last thing that you want your lender thinking about before they make a decision about you. So just use the account the way that is meant to be used. Every business transaction, every subscription, every vendor payment, every tool that you use to run your operation should be running through this account. Never commingle personal and business funds, not once, not even for something small. The thing is that not all lenders dig this deep, but if you want to have serious credit or funding, there's a high probability that they will take a look. The moment that personal expenses show up on your business account, you are telling lenders that you do not separate your personal finances from your business. That damages your credibility and gets you denied for funding even when everything else looks right. The bottom line is your bank account activity is equally as important as your personal credit score. A clean, active, organized business account tells lenders that you run a real operation, that you know how to manage money. Banks are very good at advertising a simple headline and bearing the real costs in the details. Here are the fees that catch business owners off guard most often. First is monthly maintenance fees. Some banks charge you regardless of your activity unless you hit a specific minimum balance. So know exactly your threshold before you commit. Next is similar but is a little bit different is minimum balance fees. If your account drops below a certain amount, you get charged. For newer businesses with uneven cash flow, this will add up fast. Next is wire transfer fees on both incoming and outgoing transfers. If you move money regularly from your business, these will stack up quickly. Fourth is out-of-network ATM fees. If your bank does not reimburse these, then you will feel it every month. So before you open any account, you will want to know about each one of these. And if you go with an online account, most of these fees will not exist at all. So now you have everything that you need. The documents to prepare before you apply, mistakes that most people miss, how to pick the right bank for your goals, and how to run your account so lenders take you seriously. But there's something that I did not tell you at the start of this video. Knowing how to open an account correctly is one thing. Actually choosing the right account is another. And the bank that you choose will have a direct impact on the credit and the funding that you can get access to. So the next step is simple. Go open one. If you want help figuring out exactly which business checking account is the best fit for where you are right now, I put together a full breakdown of the best business checking accounts available today. Click on this video right here. I'll see you in the next one.